Okay, so the Lidija Sveta was mentioning, and I don't have kids, so you cannot blame me for being a bad parent, but you can blame me for not being a parent. So, you know, in this position of a woman, there's so much blame you can take. So Sveta gave you a very, very cool introduction and a very interesting one, and I will now have to do a little bit of a tricky part, not tricky in a way that it's difficult or whatever, but it's a bit more detailed in a way. So we will try to figure out how the tax system actually intersects with gender equality. And we here kind of assumed that all of you already have some tax background at least, but that's, I don't know, I'm guessing maybe not the case. So feel free to interrupt at any time. I'm going to try to explain all the main crucial concepts that I will be mentioning in not too much detail. But if I skip something or I do not provide sufficient explanation to you, just interrupt and feel free to ask. So my part of the presentation is supposed to deal with the effects of the tax structure on gender equality. When we say tax structure, we mean tax system, and when I say the tax system, we mean different types of taxes which taken as a whole create the tax system. And the very basic overview of what we're going to be covering today, the first thing we'll try to explain is the concept of the gender bias in taxation. And then we will go into more detail on two main types of gender biases, the so-called explicit gender bias and the so-called implicit gender bias. Sveta mentioned something, but now we will go into a lot more detail. And especially when we go into the implicit gender bias part of the lecture, we will have to kind of break down the tax system into various taxes and then try to explain these biases through each of these taxes because they differ to a considerable extent. And at the end of the day, we will try to figure out where are we at this point in time, not Serbia only, but all the countries around the world in terms of what are we doing about gender biases and what can we as academics or students or whoever is interested in this topic, how can we help? So the concept of gender bias in taxation. There are two forms, as I already mentioned, of gender bias. The one is the so-called explicit and the other one is the implicit gender bias. The explicit gender bias, as the term itself suggests, basically presupposes that when you look at the tax code and you look at the specific tax provision, it explicitly differentiates the tax treatment of men on the one hand and women on the other. So it's pretty basic, it's straightforward, it's easy to identify because just a textual interpretation of the provision will be sufficient. On the other hand, implicit gender bias is, on the first sight, it seems what Sveta said, that the tax system is neutral. You would say whatever, what difference does it make whether you're a man or a woman? However, although the provision itself does not differentiate explicitly between men and women, it actually has very different consequences, very different effect. And when I say different effect, what do I mean? I mean very different effect on the well-being of men on the one hand and women on the other. Implicit gender bias is far from easy to identify. And I will explain a little later when did we actually start to even try to find for implicit gender biases. So in any case, again, a little bit more of explanation. Explicit gender bias presupposes that you're using gender as a criterion, and I will give you examples of explicit gender biases. Thankfully, there are not as many nowadays, but that's not to say that very recently there were many of them. And when I say recently, I mean mid-80s, beginning of the 90s. So this is a very, very hot topic and very new topic. On the other hand, implicit gender bias, basically, just imagine taxation as a cherry on top of a cake. Implicit gender bias is a result of the underlying layers of the cake. What I mean by that is like the differences, when people say differences between men and women, so don't think about it in that sense, differences between the roles they assume in the society and more specifically in the economy of the specific tax jurisdiction. And because they're so difficult to identify and even more difficult to remedy, because even when we identify them, we're not sure what to do to change the effect. And even when we change something, we're not sure where it will end. We have to wait for a certain amount of years to pass, even decades, to see where we're at after that change. Actually, there are numerous examples of implicit gender biases. And they are very, as I already mentioned, difficult to eliminate. Explicit gender biases are easy to eliminate. When I say easy, I mean conceptually easy. That basically means once you change the tax provision, you're okay to go. However, politically, it might not be easy. And you can just think of West African countries, Middle Eastern countries, many other countries in which the culture will dictate also the explicit gender bias. And again, the last kind of a difference is that explicit gender bias is definitely intentional. That's something that the tax legislator had in mind and wanted that way. Implicit gender bias most likely is not. And especially now that we have an idea of what the implicit gender bias is, we're kind of trying to figure out how to mitigate them. However, it's not easy, so you can say that it's being worked on, but we're not very far with the success. So anytime you need, please do interrupt. So as Sveta mentioned, the modern tax systems are based on the so-called principle of the plurality of tax forms. The idea is to kind of try to take from the taxpayer a bit at different stages of his life, his work, her work life, so on. So the idea is that you will have to look at the specific, not only type of the tax, you will have to look at the specific type of the tax, how it is regulated in a specific tax jurisdiction, because actually differences are huge. So what we're going to do, and Sveta already mentioned some of it, he mentioned the so-called tax objects. So you have three main tax objects. You have income, and we will be dealing with personal income tax and corporate income tax. Then he mentioned consumption. We will be dealing with consumption taxes, the most important of which are VAT and excise duties. And finally, we will be dealing with property taxes. In Serbia, what we have is property tax, like tax on real estate that you own. We have taxes on inheritance and gifts, and we have so-called transfer taxes. So when you're transferring ownership on some kind of a property to another person. So one thing I want to say about the limitations of what we're doing here is that there is very, very limited amount of research on all of these topics. Maybe the only topic on which there is not sufficient, but some research, is the effect of taxes on the involvement of women in the labor force. And that was mostly what Sveta was talking about. So there we have some data, and there we can maybe predict some effects. However, for the rest of the taxes, we are only trying to intuitively figure out what the issues might be. We don't have empirical data. So there is a lot more open questions than answers, and there is no straightforward answers. So you can have your own idea of the effect, very different from mine or Sveta's. So this is something to discuss, and feel free to give your own ideas and try to discuss this. So the first thing we will try to cover, or actually show you how explicit gender bias in taxation actually looks like. And in most of the cases, explicit gender bias will be found in the system of personal income taxation. And when you see the examples, you will figure out why that's the case. What I'm going to try to show you here is what should you look for, or where should you look at in a tax code to find explicit gender biases. I can give you some good news. In Serbian tax codes, you will most likely, or I was not able to find an explicit gender bias. However, that's not the case for all tax laws around the world. So where can you find an explicit gender bias within a tax code? The first thing where you should look at is at how income is allocated within the household. And when I say within the household, have in mind between the spouses. What do I mean here? Well, usually you will not have an issue with employment income. Generally, in most of the cases, tax systems are generous enough to allocate employment income to the spouse who earned it. However, this is not the case, for example, for income from joint property. In a lot of countries, if you have spouses owning, let's say, real estate 50-50, what I would assume is equitable, and I'm sure you would be to allocate income, like rent from that property, 50-50. But that's not always the case. You have a lot of jurisdictions in which the whole of property income is allocated to the husband. Also, income from joint family business in which all of the family is involved. In many countries, especially in Africa, all of the income that this joint family business generates is allocated to the husband, irrespective of the contribution of the wife. Even if she's not only caring for the kids, even if she has skill that she's contributing, doesn't matter, everything goes to the husband. So that's one thing to look at, and I will provide exact examples soon. The other option, or the other types of provisions where you can look for explicit gender biases, are provisions that define who the responsible person within the household is for filing taxes. So just as a way of explanation, this is something that we don't have, so you might not be accustomed to it, but there are two different manners in which taxes can be filed for. So you have jurisdictions like Serbian, in which you have separate income tax filing. So your mom files her taxes, your dad files his taxes, so each of the members of the household does his own business, so to say. You have also so-called joint filing. Joint filing means that you will be aggregating incomes of the members of the household, and only one member of the household will be the one responsible for filing tax, or declaring tax, if that's simpler to understand. Most likely, this will be the person also responsible for paying tax. And now, at first sight, you could say, but that's cool, the husband is declaring everything and paying all the tax. Well, just think about it in the way of tax refunds. In many jurisdictions, you have sometimes the right to a tax refund. So refund will be granted from the state if during the year you've been paying more of a tax than you've assessed in a joint return. And for example, we have some jurisdictions in which it will only be the husband who can claim the refund. So even if it was the wife who generated the refund, it will be the husband filing for the for taxes, it will be the husband claiming the refund, and depending on the bargaining power within the household, which is basically behind all of these issues, that wife might not ever see that tax refund. Then another option are provisions that are setting the rates of tax. This is not really common, but there was one really infamous example. In South African Republic, it was actually in force until 1995, so less than 20 years. All of the personal income taxpayers were categorized in 3 categories, and the categories were, curiously, unmarried persons, married women, and married persons. So you would think, okay, why the hell is not married women a married person? Well, you had 3 different rate structures, and the married woman was taxed at the highest rates, whereas the married person was taxed at lowest rates. So who could qualify for a married person? If you are a man, you are by default qualified as a married person. However, if you're a woman, you could try to qualify as a married person and be taxed at the lowest rates. if you can prove that you are the main breadwinner in the family and that your husband and your kids are financially dependent on you. So the husband is good to go, everything is like red carpet before him. The woman will need to provide evidence that she actually is the one who can benefit from the lower tax rates. So you might imagine what the economic effect of this kind of a measure was. I will now switch to specific slides just so that I don't skip something. Most of it I already covered, but for example, allocation of income, the first thing I already mentioned, just to explain that those are not some, third world countries. In Argentina, for example, which you would probably not expect, income from jointly owned property is allocated exclusively to the husband. And now I will switch to something, the example that I mentioned for women not being able to claim refund was actually applicable in Greece until 2018. So that was 5 years ago. So that's pretty huge. I mean, you would not expect that. And also, many jurisdictions, UK, France, until mid-80s or beginning of 90s, Switzerland, even today, Jamaica and Guernsey, even today, many other jurisdictions place the responsibility for filing on the husband when there is joint filing as an option. And interestingly, also in Ireland, very recently that was eliminated. But even if the woman was the sole breadwinner in the family, she was the only one bringing income to the table, it was the husband filing the tax return. So we're talking about European Union jurisdictions that are very developed, and this was still a thing there. And then something that might be a little less simple to understand, and that's you can also look for explicit biases in the provisions that define different tax benefits. When I say tax benefits, I mean deductions, allowances, credits, exemptions, so on. So anything that lowers your tax liability. So how would you do that as a tax legislator? Well, it's pretty simple. For example, in the Netherlands, until mid-80s, and that's something I would definitely not expect, married men, had a higher tax-free allowance than women. What is a tax-free allowance? In many jurisdictions, there is the lowest part of income that is not taxed. So that's something that's supposed to make your life easier. However, for married men, this first batch of income that's not taxed was higher than for women. Like, why? Where's the logic? Also, for example, in South African Republic, also until the 1995, married women had the right to deduct from their income only 1/2 of what men could of those contributions that they put into the pension fund. So you might imagine what the differences in pensions later will be if the tax system forces you to contribute half the amount of what the husband is contributing. 0 cents, but that's the way it was until very recently. I have to admit, there are also some cases of explicit gender bias in favor of women, but the two I did find were eliminated relatively recently. For example, in Pakistan until 2010, and I assume the other example is related to India, and I guess the tax system tried to kind of eliminate the huge difference in the number of women who are working as opposed to men who are working. Pakistan and India, for example, granted higher tax exemption for women, but that's very, very seldom the case, and obviously it's not the case anymore. And the final type of explicit gender bias is related to not how these tax benefits are defined, but how are they allocated between the spouses, to whom you are going to give these tax benefits. So one of the examples is Tunisia. first step back just to tell what kind of tax benefits are we talking here. We're basically talking about tax benefits which are granted for dependent members of the household, so for children or for the elderly or for the members of the family who are disabled. And the idea is to kind of account for the expenses that the carer has while caring for these individuals. However, where does the issue come from? Well, the issue comes from to whom are you granting these deductions? So let's say in Tunisia, these deductions for dependents are by default granted to the man. And not only by default, the woman does not even have an option to ask for it and prove whatever. In Morocco, you can try as the wife to prove that you are the breadwinner and you are the one financially providing for the husband and your children. You had also a very interesting example in the US. Thankfully, it was eliminated in 1972, but this is just a reverse situation. And that was a deduction for dependents, for disabled individuals in the home, who could be claimed only by a woman, a widower, or a man with an incapacitated wife. So that's the language of the law. So this provision basically contains an irrebuttable presumption, you cannot prove differently, that a man will be the carer only if his wife is dead or incapacitated. So each of these types of disfavoring allocations has its own issues with respect to the effects that it causes. But the underlying issue is what Sveta was explaining, and that's the family model that the tax system basically starts from, and that's the male breadwinner, female carer. We don't care if you're both breadwinning and caring, that's not going to help. So what you're doing here with these allocations of deductions, when you allocate deductions for care for dependents to the husband, what you're doing is you're paying the husband, the state is paying the husband for unpaid care provided by his wife. And obviously, because of the bargaining power between the spouses, that money might not necessarily go to funding care, whatever, the medication, food, stationery material, school books, whatever. So basically, these are different kinds of explicit gender biases that you could stumble upon when you are reading tax laws. Tijana, Tijana Stanović, is your hand raised now, or that remained from Sveta's part of the lecture? Oh, okay, so I guess that's just the remaining hand. Sorry if I didn't see it in time, but feel free to unmute yourself on your own and interrupt me. You don't have to raise your hand. Okay. So the next topic is implicit gender bias, and this is going to be a lot more touching in the dark. Okay, so in order for us to kind of be able to identify implicit gender biases, we have to have quite a bit of knowledge related to public finances and economics. And that's an issue for lawyers. That's an issue for Sveta and me as well. So you can actually do research, but you have to do a lot of research to be able to figure out these things and be confident about those. In any case, as already mentioned, look at the taxation as a cherry on top. And what we actually are looking at here is how the tax system actually treats differently different patterns of behavior, discriminates against or not, or incentivizes them or disincentivizes them. And there are different causes, so to say, of implicit gender bias, or different societal circumstances that lead to implicit gender biases. And the first one, obviously, is the differences in level of income between men and women. And obviously, there is a huge income gap. Women's income is approximately 70% of men's income, so 1/3 is lost, so to say. And the first thing that comes to your mind is most likely gender pay gap. And we all know that gender pay gap is quite substantial, approximately 15-16%. But why else? Where do you else account for the difference? It's not only gender pay gap or the differences in wages. Where else do we search for these 30% or this a bit less than 1/3 of income difference?
We mentioned in the beginning of the lecture that women and gender are attributed a priori these social roles. So, for example, women around 40% have this unpaid work at home, and they are also, as to say, voluntarily doing that. So, how is that is also generate this inequality since they are not paid
not
for
even
that.
working. Okay,
Yes.
perfect. So I should have said that first. That's the first thing is that women actually work less hours. So either they do not work at all, or women are the ones predominantly working part-time. It's not men working all that much part-time. And then when they do work, their wages are lower. But what else? Do we know any other category of income or activity that is different? Also, please, any of you who are online, just jump in, unmute yourself and feel free to answer.
Maybe they're working less in on the positions where they don't have like labor contract, so they're
Okay.
so it's like gray zone.
Oh, you mean like they don't have contract at all?
Yeah.
Perfect. Also, we could also cover them within the non-working because legally they're not even working. That's the huge part is informal economy, especially in developing and emerging countries. True. But what do you think about capital or property income? What about rents, dividends? Women own a lot less property. I will come back to that, but because they own a lot less property, they cannot generate as much capital income or property income. We will talk about that more, but just so that you know, it's not all about employment. That's just one part of the issue, and that's the most researched issue, and that's why we were talking about it the most. So what we end up here is having women being overrepresented at the bottom of the income distribution. So more than 50%, quite a bit more, of the poorest people within societies are women. And why is this relevant for taxation? Well, because of the concept of progressivity. Do we know, okay, just in case someone is not a lawyer or an economist, there are progressive, proportional, and regressive taxes. Now we will be talking about progressivity. Progressive taxes are taxes in which, with the increase of the tax base, also the tax rate raises. So if your tax base is income, let's say the most basic example, your salary, the higher your salary, the higher will be the rate you are paying. So progressivity of tax systems is crucial if you want to help women. Not only women, definitely progressivity is crucial for redistribution of income from the richest to the poorest members of the society, but because women are overrepresented among the poorest members of the society, this is especially important for them. Because what this means is that when a woman is considering entering or re-entering labor market, and especially after bearing children, what she thinks about is, what is the marginal rate of tax I will be paying for an additional hour of work? And the lower the marginal rate, the higher chances she will enter labor market. Also, as Sveta mentioned, your biggest fixed cost of entering labor market after bearing children is childcare. So if the rate of tax you're paying is sufficiently low so that you are left with more after-tax income to pay for childcare, you might as well enter that workforce. And finally, because the tax system collects more from the rich, it can actually invest, and that's something you will be talking through gender budgeting, it can actually invest in, among other things, proper childcare. And you would be surprised how many other countries, such as a lot more affluent economies than Serbia, actually provide worse childcare than here. So to you, it might not seem so important, but I guess as we all enter our family years, it becomes important all of a sudden for all of us. But let's say in Switzerland, you would have only 3 months of paid child or pregnancy leave, which is pretty unsubstantial. I think women mostly have issues even after a year of paid child leave or pregnancy leave to provide proper or to find proper childcare for their children. So these are the issues with progressivity, and the crucial point here is that as of 1980s, tax systems as a whole are ever less progressive, and especially Serbian tax system, I'm sure you're aware of, we have flat tax rates, and as a whole, our tax system is actually regressive. So it actually taxes the poor more, it burdens the poor more. So other cause of implicit gender bias is something I already mentioned, is the nature of income you're taxing. And the crucial difference here is the difference between employment income and capital income. This difference became crucial with globalization. It started with the 80s. The idea was, I have a question. I'm not a law student, so I apologize if my question seems absurd. No questions are absurd, only answers might be absurd. You mentioned that implicit gender bias is not intentional. How does one know whether it's not intentional or not? Well, we don't really know. We just assume, because we kind of know what the intention of the legislator was when he introduced certain tax provision, because you have these legal materials and you have these public debates which follow the introduction of a specific tax law. So you can look at this intention of the legislator and try to figure out what was the intention behind. And most of the time, that's not the intention of the legislator. Most of the time, legislator does not even care about women at all. It does not differentiate in terms of, it just sees taxpayers and money. That's it, most of the time. That's for implicit gender bias. Explicit, that's a different story, and that's pretty obvious. Does this answer your question, or I didn't understand it properly? Okay. Okay, thank you for the question, and all of you feel free to just unmute, because I might not see the question popping out, because sometimes I'm looking at the students who are present. Okay, so this different in the nature of income, the crucial differences between income and capital and labor income. As of 1980s, you have a huge differentiation between how income from capital and income from labor are taxed. With globalization, jurisdictions became aware of the fact that capital is very mobile, while labor is not. Although Sveta mentioned earlier, if you terrorize women, they will just run away. Workers are actually a lot less mobile because of their families, because of their work, because of their property. So unlike investors and capital, you can actually tax laborers quite a bit and be sure they will remain in your jurisdictions. That's not the case with capital. So with capital, we usually have many times lower tax rates than for labor income. And the result is, if you know that most of capital income is generated by men, you can see that this is a huge gender bias, that capital income taxation is biased against women. And this is a debate that was fought for years, but nothing has been done, or not much has been done about it. But only now did this gender perspective appear. So no one talked about it until 2 years ago when it comes to this difference between capital and labor. The next cause of gender bias is the difference in property ownership, and I will go back to that later when we switch to property taxation. Now I want to say a few things about the consumption patterns. So another cause of gender bias is the difference in consumption patterns. This might seem not as important, but you should again look at the household as a whole. In a household, if you again take into account the fact that woman spends a lot more hours cooking, homeschooling, playing with kids, cleaning, whatever you name it, managing social events and so on, you can also figure out that the consumption pattern is different in a sense. Think about, I mean, that's at least how it was in my household, although I thought my household is very equitable. It will be mostly women who will be buying cleaning agents, food, clothes for children, school items, stationery material, not to mention cosmetic, not only for her skin, but also for his skin, because he doesn't care for his skin, and so on. So you can see that consumption taxes do actually influence quite a bit how much income remains in the hands of the woman. And you could say, well, she's a stay-at-home mom and she gets the money from the husband, but she's not the one deciding how much money she will get for school items, kids' clothes, and so on. So in most cases, she will, for the sake of her children, be spending less on herself and for her needs in order to help children actually be better off. And finally, sorry.
Yeah, but go ahead.
No, I didn't have a question. I just said that because of you.
Okay, I want to reflect on that exactly. What are you talking about? We see that men are mostly blinded how these products are called, what is the cost of these products. So women, for example, my sister is doing all that, as you mentioned, and her husband is not aware that the prices of these things are very high. So it's very, as you mentioned, she spends more or less on herself and spends more money on school products for her kids and stuff, their kids. So, but her, because she is the main distributor of these things. So it's a very, very big issue. So,
especially now with the inflation, you lose track of how much prices are actually rising, and it's a huge issue, and people really don't want to think about it. I mean, even when he's doing the cleaning, he's not buying the cleaning agents. I mean, I don't know, in 95% of the cases, he will not figure out that bottle is empty and needs to be replaced. I mean, that's the way it works. I mean, it's funny kind of, but it's not funny. I mean, at the end of the day, it's very saddening. And the last thing that's probably the most, so to say, abstract, but I will explain that in more detail, is risk aversion. Women are a lot less prone to risky behavior when it comes to economic decisions. So they're much more risk averse. What this means is that women, the rates of female, so to say, compliance, how much they comply with tax laws, are much higher than men's. So men are the ones more involved in tax avoidance and tax evasion. So at the end of the day, if you have tax systems who are like, bring it on, yes, evade our taxes, this is a bias against women. And actually, especially corporate income taxes, but also personal income taxes when it comes to richest members of the society, are very, so to say, they're not happy taxes are being avoided and evaded, but they're not doing all that much to prevent it. And that's something that's important from a male-female gender perspective. Okay, so that was the general topic, and now I will switch to specific types of taxes and what we might want to think about when we look at them. Okay, so first of all, personal income taxation. I already explained what it means, and we already went through explicit gender biases, but where do we find implicit gender bias? I will not go into detail. I already explained the difference between individual filing and joint filing. But I want to explain one really huge implicit gender bias, which is being discussed, and probably one of the few gender taxation topics that are actually researched and well researched until now, and that's the so-called secondary earners bias. So what are we talking about here? What Sveta mentioned earlier, this male breadwinner, female carer model of the family, you are assuming that you will have one individual working and generating income. So you have systems which presuppose taxing household income, so combined income of the spouses, and joint filing, which means that one individual will be filing taxes for both of them. So what you have here is, if you have one earner, you will have one tax rate schedule. If you have two earners and their combined income, you will have another tax rate schedule. What does that look like, or what does it actually mean? In some jurisdictions, you will actually have the same, imagine progressive taxes, so taxes within which, with the rise of the tax base, also the rate raises. Imagine that you have, on the one hand, single household, male earning all the income, and on the other hand, you have two spouses working. You have actually jurisdictions which apply the same tax rates and the same thresholds to the single household and to the spouses. You have those who actually do add some changes into the rate, but not enough to compensate for the adding on of the second earner. What do I mean by that? If you have a primary earner whose income is, let's say, $500,000 of whatever, dollars or whatever, and this is the tax rate. So you have progressive taxes, and this is the rate that is subjected, or to which individual's income is subjected. So if you have one earner, $500,000 of whatever, marginal rate is 10%. Sorry, yeah, it's 10%, the second row. Marginal rate is the rate that will subject the last dollar or dinar of your income. So the one with which you enter the next bracket. And if you have the secondary earner whose income is a little lower, so let's say 300,000, again, marginal rate is 10. In total, they will be paying 80,000 if you have separate income filing. So each of them on their own income, that's it. However, if you have joint filing, you will be adding second earner's income on top of the first earner's income, and you will have now income jumping into the third bracket and being subjected to the 15% rate. So the difference now, the tax due with the joint filing is 120,000. I mean, usually the differences are not as huge, but it does actually happen. So this is the so-called secondary earners bias, that you are actually, because of this pooling of income into the higher bracket, making it more expensive for the second earner to enter or remain in the workforce. And because the second earner is, in the vast majority of cases, a woman, second earner bias is usually a bias against women. I read a very surprising statistics. You know the 500 Fortune companies on the Standard & Poor's list? CEOs of 400 of them have husbands who are stay-at-home moms. So 80% of those CEOs of the most impressive companies around the world have stay-at-home wives, and the rest, 20%, are singles, women, and men with wives who are actually working. So in America, it's a huge issue, among other things, because of this. Okay, so several issues. Oh yeah, one more thing I wanted to mention with respect to what Mila mentioned earlier. You have a huge issue with women remaining outside of the tax income net. So women who are either employed in the informal sector or employed in sectors in which their wages are super low, so they're not even taxed. So at first sight you would say, well, that's awesome, they're not taxed. But usually the fact that you're not taxed will be tied to other benefits that you might claim from the government. And numbers can be really insane. In India, according to some estimates, more than 90% of women are under this income tax net. Okay, so now corporate income taxation. Obviously, no explicit gender bias. We know that corporate income tax is payable by a legal entity most of the times, but we do have some ideas of where implicit biases might come from. Obviously, no real empirical studies on it. The first thing we need to remember is the corporate tax incidence. I'm not sure how aware of it you are, whether you remember it or not, but when we are talking about an incidence of a tax, we mean who bears the economic burden at the end of the day. Economic incidence, I'm talking here. So the question is, okay, obviously corporate income tax is a tax on corporate taxpayers, but at the end of the day, this is a legal fiction. Obviously, this is not going to be the one bearing the burden of corporate income tax. So who would you assume could actually bear the burden of corporate income tax at the end of the day?
Well, it should be the owner, but probably since, as we see from, for example, in the Corona times, they usually lowered the wages of the workers, so the workers were the ones who bear the risk. So it's probably the workers, and the workers are probably, in vast majority of the cases, women, so, but it's because we are in the gender course, but I will just...
Not necessarily, but you could. I mean, each of these, okay, owners could be the ones, employees could be the ones, but also consumers of the product that this taxpayer actually produces and sells could be the case. So in each of these cases, whatever the study shows you, let's say a corporate income tax in Serbia, the burden is mostly borne by, let's say, employees. Now you would have to look at employees in different sectors and see who are the majority of workers in these sectors. So you have a lot of questions to answer before you even try to figure out whether you have implicit gender bias against or in favor of women. But if you, for example, have a result of a study that it is the owners or shareholders that bear the burden, then you would know that you have huge corporate ownership asymmetries because a lot less women actually own shares. So in that case, lowering corporate income taxes, which is a worldwide trend since 1980s, will actually lead to a bias against women. And that's how you should try to think about these things. There are no clear answers, but just like trying to see where you can find something fishy, so to say. So one thing you should have in mind is that around the world for decades now, you have this trend of lowering corporate income taxes, the so-called race to the bottom, where jurisdictions are competing among each other in attracting corporate taxpayers to their territories by lowering corporate income taxes. Now maybe we have something that is that might help gender inequality. There has been an initiative to introduce the so-called effective minimum tax. below which jurisdictions will not be able to go. I mean, I'm not going to go into detail. At the end of the day, corporate taxpayers will be forced to pay the minimum effective tax rate of 15%, not necessarily important for you, but I've even heard some ideas of share of this money collected through this additional minimum tax being used to fund some aspects of gender responsive budgeting, like investing more in things that are important to women. Another issue that you should have in mind are incentives in the corporate income tax systems. So corporate income system is basically the one that provides for most of incentives. In any case, most incentives that are like more burdensome for the state than in other taxes within the tax system. And most of the time when incentives are being introduced, no one assesses their impact on gender equality. So you could actually say that, let's say, if you have an incentive for investment in heavy machinery industry, that will probably be biased against women. If you have incentives for startups, because there is a lot less women leading, so to say, startups, it might be biased against women, and so on. This is just a way for you to think about it. For risk aversion, I'm not going to go into much detail, but I've already explained the problem with the compliance on the one hand, tax avoidance, tax evasion on the other. Another issue also is the debt equity bias that you have within corporate income tax systems. I'm not sure if you remember, but it's much more usually preferable to finance your business through debt than through equity. Why is this relevant for risk aversion? Well, it appears from the studies that women's businesses are a lot more leveraged, so a lot less debt in relation to equity. So if you have generous interest deductions, which you have, and if you have this debt equity bias, most likely you will have a system that is biased against women. Gender issues in property and wealth taxation is the next topic. This is something where we have zero or very few studies, and the only thing we're trying to do is figure out these underlying issues. So the first issue, obviously, wealth gap between women and men, even larger than income gap. And obviously, not only because the less income you have, the less income you save, and the less property you can buy, but also you have different limitations in different jurisdictions with respect to women's property rights. And not only do we mean ownership, we also mean inheritance rights. And you probably covered all of this in other courses, so I'm not going to go into detail. But what you should have in mind is that this difference also might stem from the tax system. Very few jurisdictions around the world apply the so-called net wealth tax. So net wealth tax is a tax that a taxpayer pays on the difference between the wealth it has, like property it has, minus liabilities. So this would be something that would, so to say, cover this kind of economic capacity, which you don't cover through other taxes. So only a few jurisdictions around the world apply these kinds of taxes, and this would actually help lower this wealth gap and actually probably be biased against men. Another issue is the inheritance tax. Not only in Serbia we have inheritance tax, but it's very low and almost completely irrelevant. In other jurisdictions, you have a lot of jurisdictions that do not even apply inheritance tax. And you could say, so you have two ways of thinking about this issue. You could say, well, women are usually inheriting their property. They're not buying their property. Mostly, like much more women actually inherit than they buy property. So a way not to actually burden them is leave the things as they are. However, you should also be aware, I'm sure you are aware, in many countries, and that's the case in Serbia, especially in Eastern Serbia, let's say, women are expected and they're willing to give up their inheritance rights in favor of their brothers, fathers, whatever, husbands. So the fact that you're not taxing this kind of a transfer actually maybe incentivizes this. So you might want to think of introducing some kind of a tax on the transfer between a female heir and her brother, father, whatever male member of the family. Also, you could think to introduce some incentives that would support women owning land, because less than a fifth of all the land around the world is owned by women. In Serbia, that number is even smaller, around 17%. With gender issues in the taxation of consumption, I'm not going to go into detail. Most of this we've already covered. I just want to cover the topic of so-called tampon tax, because it's been a topic that was super popular during almost a decade, I think, already. Because it's not as straightforward as it looks. So the idea is that obviously these are the products that only women are using, and these are for sure necessities. And obviously people writing laws, men, do not really consider this a necessity. So these kinds of products are subjected to the regular rate of VAT, which can be substantial. And the idea was, well, let's lower VAT or eliminate completely VAT on these products. The idea was, this way the price of the product will be lower and we will help reduce so-called period poverty. So a nice idea, but something that you should be aware of, and that's something that's not easy to explain to voters. That's why studies do not really help, obviously. We have now studies that are being done post festum, so after these reductions were introduced, that show very clearly that the prices were not reduced, and definitely not for the amount of the rate that was previously reduced. So at the end of the day, who benefits from this reduction? The sellers and producers of menstrual hygiene products, and not the users or consumers of these products, i.e. Women. So this is something that you should always think twice. Even when it sounds good, it might not be as good at the end of the day when we actually go through research. Sveta will be talking about that a bit more, but what would be the better option? Just provide free menstrual hygiene products in school, universities, at the workplace, public toilets, wherever you can, museums. That's a much better option. And I'm not going to go into this. I have just one more example that I'm not sure it's an example of an implicit bias, but you might help me. It's related to our tax system. VAT is in question, and the VAT refund you have the right to when you buy your first flat. So my thinking was, and this is an example from practice. A friend of mine got married and they wanted to buy a flat, him and his wife. And the idea was they're both breadwinners, they both plan on being carers one day, and they wanted to buy the flat 50-50. So how this incentive works is that the buyer, the future owner of the flat, gets a VAT refund for 40 square meters in his own name or in her own name, whereas other dependent members of the household, on the basis of them, he or her, the buyer, will receive another 15 square meters or reduction for another 15 square meters. So if if it were them both buying the flat and having the flat 50-50, they would actually be able to claim only the 50% of the 40 square meters, so 20 and 20. So they could get a VAT refund for 40 square meters, both of them in total. But if they were to agree to buy the flat in his own name or her own name, only name, they would be granted 40 square meters plus 15 square meters. And you could say, well, they could have agreed that she is the owner, but you can imagine how it works, not only in Serbia, but probably in most cases, women will be like, yeah, it doesn't matter, let it be in your name, I'll give up. So this is something that incentivizes directly, I think, households to register ownership on real estate in the cadastre in the name of the male breadwinner, or not even the breadwinner, one of the breadwinners of the family who happens to be of male gender. So I'm not sure whether, Sveto, is that it?
I would agree. In these terms, I would absolutely agree that it's the way in which the measure works just confirms the existing societal roles.
So that's it for me, 3 minutes more. I just, at the end of the day, wanted to show you how you all can contribute just by knowing where to look, where to take a break, take a pause, and think about some things. And just to be sure that we're not the worst ones, OECD actually did a very recent study on whether jurisdictions around the world actually even try to identify and assess implicit gender biases, and almost 60% of OECD countries and some other, again, most developed jurisdictions said, no, we're not doing it. Some of them said we do not know how to do it. Some of them actually said there are no implicit biases. So actually, we're doing a pretty good job so far. So we might as well continue doing so. So that's it for me. If there are any questions, I'm here to answer them.
So I have many questions for both of you, but maybe only one for you now, which I do not understand well. Please try to tell us a little bit more about differences between regressive taxing. For example, you said Serbia has the regressive taxing, progressive, and impacts of these opposite taxing systems in these regards.
Okay,
but very shortly, and then we will have time later.
Okay, so when I said that Serbian personal income tax is borderline regressive, it's not explicitly regressive. So rates are not presented in the law as regressive. It's not that with the increase of income, rates are lower. No, but as a whole, it actually is regressive because it gets most money from the poorest ones. Take, for example...
I understood that, but that's a shocking...
Yeah, but just take, for example...
I understood that, and that's...
It's a terrible thing.
I would just add a little bit. I think it's a little bit worse than that. Because if you take into consideration that mandatory social security contributions are in effect a form of taxation, mandatory social security contributions are levied up to a maximum amount of 5 average salaries, which means basically that even mathematically, your total burden when mandatory social security contributions are included actually drop in terms of the highest incomes. So for example, if you earn €1 million, your effective tax burden will be lower than if you earn, let's say, €100,000.
So Sveta,
actually, it's going to be the same.
We
if you
definitely need
€3,000.
Definitely, we need more students into taxes, so this is a great thing to
revolution as one of the crucial parts of the political revolution.
For sure. And one more example, which is even more important for women, part-time workers in Serbia, social security contributions that they pay, there is the lowest threshold. And even though they work lower hours and should be paying lower social security contributions, they're paying this minimum level. So they're actually more costly for employers to take them part-time workers, which mostly are women, especially in Serbia. I don't know anyone who works part-time and is a male. So we have a lot of problems that are to be resolved, but
So let's make.
And the other side is that the VAT system, so the consumption side is always regressive in its effect everywhere in the world, because if you have, and it's very clear, if you have €1,000 a month and you live in Belgrade, probably you're not going to save anything because you're going to spend everything. That means that the government took €200 from you through consumption tax, because everything you buy, and if you spend all your money you bought, right, stuff is subject to VAT. If you have 10,000, you could spend 5,000 and save 5,000. Now VAT is not applied on the side part of the money that you save. So that means that out of your total income, only half of it was subject to consumption taxes. So essentially, consumption taxes hit the hardest those who have the least, because those who have the least can't
Spend
save anything.
everything.
They spend everything.
They
And-
can't say that.
exactly.
And usually, if you look at the total of the tax system, you would, because it's you can't make consumption taxes
Regressive.
they're always regressive, and they can't be it's administratively impossible to make them different. So you have regression here, and then you should have progression at the level of direct taxation to make the system in equilibrium. Now, if you have
Personal income tax is one of the
now, and
direct-
if you have the Serbian system, which is a borderline regressive, not even proportional at the level of direct taxes, and regressive at the level of consumption taxes, the whole system is regressive without a doubt.
So let's make 15 minutes break, online attendance. So we have 15 minutes break and then we will proceed.
I hope you heard Professor Dragica. We have 15 minutes break and then we come back to continue with gender responsive budgeting.